We've all felt it. That nagging feeling that we're missing a big opportunity. In trading, this is called FOMO, fear of missing out. It's that rush of urgency to buy when a stock is going up, or sell when it's dropping, just because everyone else seems to be doing it. This feeling is powerful and can easily lead us to make impulsive trading decisions. Instead of following our planned strategy, we chase the market, buying high and selling low. This is the opposite of what successful traders do. The problem with FOMO is that it's driven by emotion, not logic. When we trade based on FOMO, we're not thinking clearly about our decisions. We're reacting to the market's movements, instead of anticipating them. This emotional trading is a recipe for disaster. FOMO often leads to poor trading decisions because it short-circuits our rational thinking. We abandon our trading plans and risk management strategies, jumping into trades without proper analysis. Driven by the fear of being left behind, we ignore warning signs and buy assets at inflated prices. When the market inevitably corrects, we panic and sell at a loss. This cycle of chasing gains and realizing losses is a hallmark of emotional trading. Instead of making calculated decisions based on our analysis and risk tolerance, we let our emotions dictate our actions. This leads to impulsive trades, often resulting in losses and reinforcing the cycle of FOMO. FOMO in trading can stem from several sources. Social pressure plays a significant role as we constantly compare ourselves to others. Seeing fellow traders boast about their profits can trigger feelings of inadequacy and a desire to catch up, even if it means deviating from our plan. Past trading losses can also fuel FOMO. We might feel pressured to recover those losses quickly, leading us to jump into trades without proper due diligence. This sense of urgency can cloud our judgment and lead to further losses. Lastly, a lack of confidence in our trading strategy can make us susceptible to FOMO. If we doubt our approach, we might be tempted to follow the crowd, believing that others have figured out something we haven't. Overcoming FOMO requires a shift in mindset and the development of disciplined trading habits. We must acknowledge that trading is not about chasing every opportunity, it's about patiently waiting for the right setups that align with our strategy. Here are a few practical strategies to combat FOMO. Stick to your plan. Develop a well-defined trading plan with clear entry and exit points and stick to it. Don't let market noise or the fear of missing out derail your strategy. Manage risk. Determine your risk tolerance and never risk more than you can afford to lose on any single trade. This will help you stay disciplined and avoid emotional decision-making. Focus on the process. Remember that trading is a marathon, not a sprint. Don't get discouraged by missed opportunities or short-term setbacks. Instead, focus on consistently executing your plan and learning from your experiences. By understanding the psychological roots of FOMO and implementing practical strategies to overcome it, you can become a more disciplined and successful trader. Remember, trading is not about being right all the time. It's about managing risk and making rational decisions based on your plan. Stay focused, stay disciplined, and you'll be well on your way to achieving your trading goals. We're diving into one of the biggest emotional traps in trading: FOMO, the fear of missing out. FOMO might feel like an overwhelming urge to jump into a trade without due diligence. Acting on FOMO is one of the fastest ways to drain your account. Stick around for top strategies to master FOMO and protect your trading. The best defense against FOMO is a rock-solid trading plan. It takes the emotion out of trading because you know exactly what you're looking for, how you're going to enter a trade, and when you're going to exit. This means knowing your entry and exit points before you even think about hitting that buy button. If the trade doesn't fit with the criteria you've laid out in your plan, it's not your trade. Don't chase it. Stick to your system. Trust me, there will always be more opportunities. We've all been there. You make a trade based on emotion, it goes against you, and you're left wondering, what was I thinking? This is where journaling comes in. Write down everything: the asset, your entry and exit points, your profit or loss, and what triggered that emotional decision. By identifying the patterns in your emotional trading, you'll start to recognize those triggers in real time. Journaling brings self-awareness, key to breaking bad habits. Social media can be a dangerous place for traders, especially when you're bombarded with screenshots of perfect entries and easy money. Remember, those are just carefully curated snippets. Focus on your own trading plan, your own risk tolerance, and your own goals. Instead of chasing someone else's wins, focus on developing your skills, mastering your strategy, and building consistency. Don't let the noise of social media distract you from your own path to success. One of the best ways to combat FOMO is to step away from the charts. Set alerts for your desired entry and exit points and then step away from the computer. Go for a walk, grab a coffee, do something, anything, that doesn't involve staring at those charts. This prevents you from overtrading by removing the temptation to jump into every little price fluctuation. It helps you manage your emotions by giving you some distance from the market's constant ups and downs. Remember, trading is a marathon, not a sprint. Let those alerts do the heavy lifting for you. Sometimes the best trades are the ones you don't take. You are not going to catch every single move in the market, and that's perfectly okay. The goal is to consistently make profitable trades over the long term, and that means being selective. Don't beat yourself up if you miss a trade, even if it turns out to be a big winner. There will always be more opportunities. Focus on the trades that align perfectly with your strategy and meet your risk parameters. Patience in trading is not passive, it's an active discipline. It's about having the self-control to wait for the perfect setup, even when it feels like everyone else is getting rich without you. The best traders are the ones who have mastered the art of patience. They're waiting for the high-probability setups, the ones that align with their trading plan and offer the best risk-reward ratio. When they see that perfect setup, they strike with precision and confidence. Trading is about making smart decisions consistently over time, and that requires patience, discipline, and emotional control. FOMO is just another opponent in the game of trading. By having a solid plan, understanding your emotions, and developing that trader's mindset, you can turn FOMO from a profit killer into a powerful tool for success. The market rewards those who are disciplined, strategic, and in control of their emotions. Stick to your plan, master your mindset, and watch those profits roll in. Now get out there and crush it.